everyone, this is Taruna Kanani. Today I want to talk about why it's smart to hire your children in your business. If you hire your child and if they are performing any legitimate work for your business, you can certainly pay them salary, W-2 wages out of your business income and claim it as a business deduction. If your child is under age 18, you don't have to pay any FICA tax, meaning no Social Security and Medicare tax. There are certain exceptions to this rule. For example, it depends on the type of entity you are hiring your kids under. Now, with Tax Cuts and Job Act, the standard deduction increased to $12,000. And because of that, if you are paying your child up to $12,000 in salary, they do not have to pay any in federal tax nor state income tax. Plus, you can also claim them as a dependent on your tax return. Now, if you are paying more than $12,000, they do have to pay a small amount in tax, but you will still realize substantial tax saving. So essentially, what we are doing is we are shifting business income from a higher tax bracket to the lower tax bracket. Now, when you want to hire your kids, you have to follow certain rules, right? So the first and foremost is you need to hire your child as an employee. Then you need to pay reasonable compensation, and it should be appropriate for the type of work they are performing for your business. And then what else? There are a few more rules. Yes, state regulation. You need to watch for state regulation. Many states have a minimum age requirement to hire minor as an employee. And of course, you need to follow the exact same process as if you were to hire anyone outsiders. For example, you need to have job description, employment agreement, certain forms, for example, I-9 and W-4 on the file. Now, this strategy comes with additional benefit, which is Roth IRA. In order to contribute to Roth IRA, you need to have earned income, and it should be after tax money. So when you are paying salary to your kid, it becomes earned income in their hand, and it's also considered as after tax money. So your child can contribute Roth IRA using this income, and once they contribute, fund in Roth IRA grows tax-free. And when your child withdraws out of Roth IRA at the retirement, they do not have to pay any tax on initial contribution as well as any additional earnings. Now imagine if you are, so for the Roth IRA, the limitation is $6,000 annually. So just imagine if your child is contributing to Roth IRA on $6,000 annually, starting at 13 or 14 or 15, depending on when you're hiring your child in your business. And assuming on conservative base that your IRA is earning 6% annually, by the time your child will retire, the Roth IRA will grow to maybe 2 to 3 million, and entire amount will be tax-free. Can you imagine that? On top of that, your child is eligible to withdraw a little bit earlier for certain exception. For example, to pay college tuition or for first-time home buying. So when you withdraw for like this kind of exception, there is no tax, no penalty, as long as your contribution to Roth IRA is sitting in the fund at least for 5 years before withdrawal. And that's the beauty of this strategy. And that's why this is my favorite option compared to setting up of Section 529 plan. Again, this is Taruna Kanani, President and founder of KB Tax Divisor CPA. Please follow us on Facebook and YouTube. And give us a call if you have any questions. We would love to help. Thank you.